What's up, guys? It's Rob here, and today we're going to be talking about four dividend stocks that have actually been performing incredibly well over the past couple of weeks, months, and years. These stocks are all near their all time highs. They've been outperforming the market, and a lot of investors have been flocking to dividend stocks, value stocks, because the market is viewed as being a little bit more risky right now. So people have been shying away from growth oriented stocks and actually flocking towards dividend stocks as of late. Now, these are stocks that I've been holding for a long time. They're some of my favorite stocks out there. I love collecting dividends either monthly or quarterly. We're going to talk about these four stocks and how they all accrue dividends in drastically different ways, right? These companies accrue dividends from drastically different activities. We're going to talk about what they do and why they're some of my favorite companies out there. So the first thing that we're going to look at is Invesco S&P 500 High Dividend Low Volatility ETF. Now, this actually isn't a stock, it's an index fund, and its ticker symbol is SPHD. And you can see over the past couple of years, it's performed incredibly well. You can see the COVID dip right here, and they just shot right back up. They actually hit all-time highs just last week at $49.61. Currently, they're trading for $47, and they have a 3.3% dividend yield. So every year, you get a 3.3% dividend on top of whatever price appreciation they have. Now, the beauty of this stock is they pay out dividends every month. So you're collecting monthly income instead of quarterly income as most dividend stocks end up operating. Now, this is an index fund comprised of about 40 companies that are in the S&P 500. They're viewed as high dividend companies and low volatility companies. So there's about 40 of them. You can see the list right here, and they're in different sectors: materials, energy, healthcare, real estate, consumer staples, and utilities up here. So there's a bunch of different companies in this index fund. It makes it very low volatility, right? It's very it's pretty stable for the most part. It typically just trends up. Obviously, when COVID hit, it shot down along with the rest of the stock market, but it does tend to perform pretty stably, right? You're not going to see huge gyrations in the stock price most of the time. Sometimes you can if there's huge activity going on, but for the most part, it's going to be relatively stable and just pay out those monthly dividends, which are very enjoyable to collect. Now, it's not the highest yield dividend stock out there, but it is paying out those monthly dividends and it's low volatility. So that's kind of what you're looking for in a dividend stock a lot of the time. You don't want something that's going to be extremely volatile. You're oftentimes not looking for huge capital gains and appreciation in stock price, which we have actually seen with this stock, but you're looking for a reliable monthly dividend or quarterly dividend. So that's the beauty of SPHD for anyone who's interested in that. Now, the next company that we've got is actually very interesting. It's somewhat similar, but is more privatized. Gladstone Investment Corporation, ticker symbol GAIN, GAIN. And this is a $16 stock with a 5.6% dividend yield. Very impressive. Now, this company is a business development company. It's a private equity fund that focuses on lower to middle market cap companies that they acquire. They look for companies with $20 to $100 million in revenue and attractive fundamentals. You can see this stock has performed incredibly well over the past couple of years. It crashed during the 2008 financial crisis, and if you were buying near the bottom of that, you've more than 10x your money over just about 10 years there. So it's a pretty impressive company. They also pay out monthly dividends, and actually they pay out more than monthly dividends. I counted up the dividends in 2021, and they actually paid out 15 dividends, so more than one a month. Sometimes they doubled them up. They had 6 cents here and then 7 cents there. And this is a very high growth company as well, right? They're not paying out all of their dividends to investors, all of their profits. They're not paying out all of them. They pay out a decent amount, but they also keep some for themselves to keep acquiring new companies. You can see they have acquired quite a few companies in their portfolio. Not nearly as many as SPHD, but they do actually like to buy out these companies instead of just investing partly in them. So it's somewhat impressive, right? They have a very diverse holding. They have manufacturing, they have consumer products, they've got business and consumer services, and they've got a fairly high dividend yield, 5.6%. And the fact that their company is actually growing over the past many years instead of shrinking with that high of a dividend makes them even more impressive. So GAIN, GAIN, Gladstone Investment, a very interesting dividend stock, one of my favorites out there. Now we've got another interesting one, Camden Property Trust, ticker symbol CPT. This is a real estate investment trust, a REIT. You guys might have heard of REITs. They're essentially a really great way to get into real estate if you don't have a lot of capital. A real estate investment trust essentially lets you buy shares of a stock and then invest in real estate, either residential real estate, sometimes it's commercial residential real estate like apartments. That's actually what CPT, Camden Property Trust, does. And we're going to talk a little bit more about their holdings, right? So they have a 2.31% dividend yield, not as high as GAIN or SPHD. But what they do is they invest in properties, right? They own apartment complexes. They have 170 properties and 58,000 apartments in those properties. So they're fairly large complexes, and they trade for $162 per share. CPT has done incredibly well over the past year or two. They've been doing incredibly well as real estate prices have been skyrocketing. So this is definitely a real estate play. If you believe in real estate, and if you think that real estate is going to continue to appreciate, then CPT could be for you, right? Not financial advice, but if you really believe in real estate, it could be for you. Now, it's a very risky play at the moment, right? Real estate typically does somewhat poorly as interest rates are rising. The Fed is talking about raising interest rates and raising them somewhat aggressively. So that's something to watch out for potentially over the next couple of months. If you want to wait on this one, you might be able to get it on a bit of a discount if they do end up moving down due to the interest rate hikes that we're expecting from the Fed. They've already started moving down just a little bit off of their highs that we saw in December of last year, but they pay out a quarterly dividend. And you can see that they've actually been increasing the dividend that they pay. Back in 2019, they were paying an 80-cent dividend. Then in 2020 and 2022, it was an 83-cent dividend. And now in 2022, they paid out 83 cents in 2020 and 2021. Now in 2022, they're paying out a 94-cent dividend. Now, if you actually look at the difference between their earnings and the dividends that they're getting, you can see that they're keeping a lot of capital for themselves, right? $1.51 was their earnings for the last quarter, and they paid out a 94-cent dividend. The difference in that they're keeping for themselves and they're going to use to buy up more properties, right? They're buying up more properties. They want more apartments so that they can actually continue to raise the dividend yield every month, right? That's what they're looking to do at the moment. So they're still growing. You can see their price has been appreciating pretty dramatically. So they're not as solely focused on dividends as some of the other companies that we've talked about, but they are actually growing the stock price as well. So they pay out only a 2.3% dividend, I believe, but they are growing the stock price fairly rapidly as well. So that's what Camden Property Trust is all about. Now, the last company that we're going to talk about, it's not actually a company. It's another high yield dividend index fund, VYM. It's not as stable as SPHD, right? It's not as focused on low volatility, and their dividend yield is actually a little bit lower. It's 2.75%. What I like about this company, VYM, you can see it's also appreciated in price. But what I like about them is that they actually have far more holdings than SPHD. SPHD only had about 40 holdings. VYM has 445 holdings, so about 10 times more holdings in VYM. And that actually serves to decrease the risk of this company, right? You don't have to worry as much about one or two companies falling rapidly because there are 445 holdings. So they all make up a much smaller percentage of VYM. And you can see the list just goes on and on. They've got Johnson & Johnson, Pfizer, so the vaccine stocks have been very kind to them. And you can see there are just a ton of companies that are being held by VYM. So they've actually been performing fairly well over the past couple of years. They're near their all-time highs. Just last week, they were very close to them. And they've been performing incredibly well. They pay out a reliable dividend every quarter, and that's what I like about VYM. It's just another way to diversify. Instead of just holding SPHD, you get a company that has a similar way of operating, but also has far more holdings, even though it is a lower dividend yield. So those are the 4 dividend stocks that I wanted to talk about in this video. 4 of my favorites, and 4 drastically different ways of operating, except for SPHD and VYM. Those are somewhat similar. But other than that, guys, that's what I've got for you in today's video. Keep in mind, none of this is financial advice. And other than that, guys, have a great day. I'll see you in the next one.